Today we're answering the question, what are some tax strategies for retirement income? Great question. Why is this a good question? Because taxes are so important. So many retirees, so many investors focus on getting a little bit more of a rate of return, and at the same time, they're losing maybe a third, maybe more of their return to taxes. So what if instead of chasing a higher rate of return, we get the same rate of return, but get to keep more of it? Very, very important, right? Doesn't that make sense? It's not what you earn, it's what you keep. That's the old saying. So let's talk about tax strategies for retirement income. The first thing you need to think about when you're planning your retirement income is, who is the money for? What do I mean by that? Well, my wife and I, Wendy, I'm 58 years old, so we're getting close to the age where I could retire. Don't plan to, certainly for the next 10 years, but I could retire. And we've been fortunate. We've lived below our means. We've saved a lot of money. So there is some money that it would be almost impossible, unless we really ramped up our lifestyle, to spend. So we have some of our money that's for children and grandchildren. I have one on the way, by the way, and some money that is for us. Well, that money that's for children and grandchildren, I want to set that money up. That's not for Wendy and I, but for someone else, in a way that it passes to them in the most tax efficient way. So those types of assets might be stocks, where they get a step up in cost basis. They don't have to pay the tax on the profit. It might be Roth IRAs. It might be life insurance and a trust. We own all of those things. The money that we want to use for our retirement income, ideally we don't pay taxes on it, but sometimes that means we pay taxes today so that we don't have to pay taxes on a larger amount in the future. And what am I talking about there? I'm talking about really having the conversation on whether you should convert some of your IRAs, 401ks, any type of traditional retirement accounts over to a Roth IRA. Right now, as I record this in 2021, we are at a fairly low tax rate historically on a personal level. Very likely the taxes will go up. And if they do go up, they're going to hurt those of you that did a great job saving for retirement. So you may want to do a conversion, pay some taxes today so you pay less taxes in the future or over your lifetime. Also, if your kids or grandkids inherit money from an IRA, they now have to take all the money out within 10 years. Everything has to come out within 10 years. So there's no opportunity to stretch those taxes over their lifetime. So what am I saying here? What's the bottom line? The bottom line is, if the money is not for you, you should take action right now. We're at low tax rates. Set it up so the people that are inheriting that money can enjoy that money to the utmost, which means maybe reducing their taxes in the future. If the money is for you, then we want to decide, should you spend money from stocks and bonds that are not in retirement accounts first, or should you spend money that are in retirement accounts and leave those stocks and bonds alone? So this segment really is to get you thinking about those different categories, but I want you to start with that question, who is the money for? Because for some of you, you want to use your taxable money today so that you pass on tax-free money in the future. If you enjoyed this topic and you want to hear more, just click on the link.